If you are part of the percentage of Americans who contribute the 40% wealth of your country, you might have to consider these choices on how the rich are avoiding to pay taxes. Hey guys, and welcome back to the channel. For this video, we'll discover interesting ways on how the rich avoid paying their taxes. But before anything else, please leave a like on the video, and also don't forget to subscribe to our channel and click the notification bell down below so you won't miss any of our future content. Without any more interruptions, let's just go ahead and get right into it. Those making $10 million a year pay an average income tax rate of 19%. $70 to $100 billion is the estimated tax revenue lost each year due to loopholes. How is it possible for the rich to hide these huge amounts of money from the US government? Well, for one, putting it in the freezer. Trust freezing is a way for the rich to avoid national estate tax by means of transferring their valuable assets to others. Examples are their family members. There's also another common technique, which is to trade common for preferred stock. However, you might encounter problems, such as when you sell your common stock, it might give you a huge amount of capital gains tax. But the smartest technique they are doing is using both ways in order to live off the dividends. For number 2, sending it overseas. The next technique is sending your money in another country where accounts are deducted with smaller taxes. This is what they call tax havens. Those entrepreneurs and companies who benefited in this kind of setup for how long are David Bowie, U2, and the Rolling Stones. The most common cash hideout of the rich people is the Cayman Island, where registered organizations are way bigger than the registered residents. The estimated registered companies in this island are more than 85,000. For number 3, stocking it up in options. By taking a portion of your reimbursement in stock selections, you can set if you're going to pay for your taxes, knowing that most options are, since taxation is applicable only for options that are exercised. Example of executives who use options are Howard Schultz from Starbucks, Fred Smith of FedEx, William Weldon of Johnson & Johnson, and many others. Moving on to number 4, play shell games with it. Next is funneling your money by making your company a shell company that only exists on paper, which will avoid you from paying taxes. This is actually legal, but what's challenging here is it has no physical products or services. However, this is vastly used in buy and sell operations to avoid commentary on international processes conducted. That will lead you to no tax payments. One well-known businessman, Mitt Romney, was caught in some aggravation for apparently using a shell company to avoid taxes. For number 5, swapping it out. The next technique is exchanging the gain and loss of two parties. It's an agreement which does not involve transferring of ownership. What's good about this is it doesn't compromise transaction costs, and naturally, local taxes on payments too. For number 6, playing dodgeball with it. Capital gains tax is a profit such as stocks, bonds, property, or precious metals purchased for a lesser amount, as it's not a portion of inventory assets for sale. However, lapses you may actually encounter here is when the buying stock option sets the portion price at a fixed rate, then loaning money from a savings bank using the shares as collateral. With this, the borrower will pay the loan from his money or another loan. For number 7, go corporate with it. Going corporate may give you some loophole of having a higher income tax. However, you can incorporate your own personal brand, which is actually a smart move. This will allow you to channel wages through a normal corporation, giving yourself an interest-free income, receive expenses, lessening your income taxes. For number 8, kick it down the road. Next way is to put a portion of your salary in a deferred compensation plan, which will allow you to increase your earnings since taxes are avoided for 10 years. Did you know that 79% of CEOs and companies have deferred compensation plans? For number 9, giving it away. Being an initiative for charity donations will help you reduce your taxes, and at the same time, you will feel virtuous about it. For number 10, make it luxurious. Give some allocations of your money for an extravagant lifestyle, buying a yacht, properties, houses, lots, and other luxurious items. As time goes by, you can sell them at a lower rate of taxes compared to investment income. Another way is buying your second home for rental purposes, where you are not required to consider the rental payment as income. Are there any other ways to get your unreduced income? What do you think in our list is the best way to avoid taxes? Feel free to share it in the comments section below, but that's gonna do it for today. So if you guys enjoyed the video, make sure to hit that like button, and don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll put out for you guys. We're signing off for now, but we will surely catch you all in the next one.